So hello, we were doing auditing for EPFO and we have already completed 4 chapters, and now this is our 5th chapter, which is Audit of Financial Statements. So let's start with this meaning and scope. Audit of Financial Statements, independent examination of entities, financial statements. क्या होता है financial statements? That is your balance sheet, statement of profit and loss, cash flow statement of changes in equity, and notes to express an opinion whether they give a true and fair view, are prepared in accordance with applicable financial reporting framework principles. So SA is standards on auditing. We have already discussed this. Standard on auditing. Yes, standard on auditing 200, which is about overall. Standard on auditing 315, which is about risk. Standard on auditing 330, which is about responses. Then SA 500, which is about evidence. Then SA 560 is about subsequent events. SA 550 is about related parties. SA 700, 705, 706 is about auditor's report, opinion, emphasis. Then SA 570 is about going concern, and 540 is about estimates. Now objectives of audit of financial statement: from an independent opinion on whether financial statements are free from material misstatement, that is error or fraud. Verify compliance with accounting standard and legal regulatory requirements. Ensure proper presentation and disclosure required by law, here standards. Identify material uncertainties, that is going concern subsequent events. Communicate key audit matters if required, and deficiencies in internal control to management, those charged with governance. So now again in this also the conduct is going to be same. We'll do theory, after that we'll move to some of the previous year question or topics, and then to our flashcard which you can use for your revision, as well as these are your expected questions. So coming back to our responsibilities: management prepares financial statement and responsible for internal control, accounting records, estimates, disclosure, going concern, assessment. Then auditor obtain reasonable assurance, plan and perform audit, obtain sufficient appropriate audit evidence, form and express opinion, comply with ethical requirement, independence, which is our standard on auditing 200 and 220. Then overall audit approach: understand entity and environment, identify material misstatement risk, that is 315. Then determine materiality, that is 320. Develop audit strategy and plan. Standard on auditing 300. Test internal control if relying on them, and perform substantive procedures, that is standard on auditing 330. Obtain audit evidence, standard on auditing 500. Inspection, observation, external confirmation, recalculation, performance analytical procedures. Evaluate accounting estimates and disclosure, standard on auditing 540. Consider going concern, that is standard on auditing 570, and subsequent events, that is standard on auditing 560. Conclude and issue auditor's report, that is 700 series. Then main audit areas and procedure: revenue and receivables. So risk, fictitious revenue, premature recognition, revenue cutoff, related party sales. Procedures: sales cutoff test, examine sales invoices, dispatch docs, reconcile ledger to sales register, send receivable confirmation, test provision for doubtful debts, analytical ratios, receivable days, trend analysis. Then purchases and payables. Risk: omitted liabilities, fictitious purchases to inflate expense cutoff issue. So we have already seen this in the previous chapter as well. Then in what cases expense is being inflated by showing fake purchases. Okay, then procedures: vendor statement confirmation, cutoff at year end, examine goods, invert notes, match invoices to GRN and PO, search for unrecorded liabilities, post period invoices or payments. Then inventory or stock, risk, existence, valuation, obsolescence, wrong measurement. Obsolescence के बारे में हमने कहाँ पढ़ा था, जहाँ हमने wear and tear भी पढ़ा था, that is a depreciation. Then procedures: attend physical stock count, test roll forward, test costing method, that is our FIFO, first in first out, LIFO, last in first out, and weighted. Test net realizable value, analytical, that is gross margin, inspect slow moving items. Then fixed asset and depreciation. Risk is fictitious asset, under or over depreciation, capitalization versus expense. Procedures: physical inspection, verify title deeds, match additions to invoice or board approvals, review useful lives and depreciation method, recompute depreciation. Then cash and bank balances: what are the risks? Theft, wrong bank balances. Procedure: bank confirmations, reconciliation, cut off testing of checks, check for restricted cash, verify subsequent bank statement entries. Investment: risks are valuation, classification, current or non-current, and impairment. Procedure: inspect certificates, confirmation from custodians, mark price check for quoted test impairment. AS IFRS rules. About our IFRS, so we have seen this जब हम देख रहे थे IND AS, that is India Accounting Standards. You tell me what is IFRS. Then provisions, contingent liabilities and provision for employee benefits. Risk: understatement of liabilities, inadequate provisioning. Procedure: examine legal letters, management representations, actuarial reports for pension or gratuity. Then test basis of provision, conform regulatory compliance. Related party transactions, that is RPT, undisclosed or biased RPTs. Procedure is identify related parties, that is standard on accounting 550, examine contract, board minutes, ensure disclosure in notes are complete and correct. Disclosure in notes are complete and correct. Then accounting estimates and judgment. What are the risks? Bias या management override, estimate for impairment, useful lives, provisions. Procedure: review method, test assumptions, compare to past outcomes. Invoice valuation expert if needed. Standard on accounting 540. Then going concern, consideration, liquidity forecast, covenant breaches, subsequent events. Procedure is review management, going concern assessment, cash flow projections, correctness of disclosure, standard on auditing 570. You'll be more clear when we'll be doing the questions flashcards. So don't worry, when we'll do flashcards, you'll be clear about the type of questions and about these things as well. Then subsequent events types, adjusting events that provide evidence of conditions existing at balance sheet date versus non-adjusting, that is standard on auditing 560. Procedure: review post-balance transaction, management inquiries, read minutes and bank confirmation, ensure appropriate disclosure. Then audit evidence sufficient and appropriate. So sufficiency is quantity, that whether the quantity is sufficient or not, or good enough or not. Then appropriateness is relevance plus reliability, that whether something is relevant or not, is related or not, and reliable, something can be trusted or not. So that is your appropriateness. Then reliable evidence, external confirmations, original documents, contemporaneous record, independent third party evidence. Less reliable evidence, internal unaudited forecast, common techniques, inspection, observation, external confirmation, recalculation, reperformance, analytical procedure. Then analytical procedure, required in planning and overall review, standard on auditing 520, compare current year to prior, ratio analysis, trend analysis, reasonableness test useful for spotting unusual fluctuations. Then sampling and test of details, audit sampling, select representative items for test, statistical or judgmental. Then test of control versus substantive test, decide based on assessed control risk, that is standard on auditing 530. Then audit of disclosure and notes, verify completeness, presentation, classification and compliance with applicable accounting standard and statutory disclosure requirements. Example: related parties, fixed asset, borrowing, contingencies. Then auditors report and types of opinion. Standards: standard on auditing 700 about forming opinion and reporting. Then standard on auditing 705 is about modifications, and standard on auditing 706 is about emphasis. You might find direct questions from these as well, that which of these is related to standard on auditing 700 or 705 or 706. Then reports: unmodified, clean opinion, financial presentation, trade and fair value. Qualified opinion is except for specific matter, material but not pervasive. Then adverse opinion, financials are materially misstated, material and pervasive. Disclaimer of opinion: unable to obtain sufficient evidence, scope, limitation, material and pervasive. Key elements: title, addressee, management's responsibility, auditor's responsibility, opinion paragraph, basis for opinion, other matters, signature, date, place. Emphasis of matter paragraph used to draw attention but not modify opinion. Key audit matters KAM applicable for certain reporting frameworks, often in ISA and IFRS environment. Then reporting on other legal and regulatory requirements. Auditors may have to report on fraud to appropriate authority as required by law or regulations. Compliance with statutory forms, example CARO for companies if applicable. Reporting to regulators, that is your RBI, IRDA and other such regulatory bodies as required by sector rules. Then management representation and documentation. Representation letter obtain writer confirmation from management for matters where audit evidence is limited. Then audit documentation, working papers showing planning procedure evidence. Conclusions, retention as per standard on auditing 230. Then common PYQ topics that you might find. I've already discussed it multiple times when we were doing accounting principles as well as in the previous chapters कि क्या क्या चीज़ें important है, your definitions, your merits, demerits, uses, objectives, limitations. All of these things are very important. So definition and objectives, you have seen materiality concept and its use, types of audit opinion, then subsequent events and auditor procedure, auditor versus management, that is your differences, then related party transaction disclosure, going concern consideration, and external confirmation, that is bank or debtors. So everything which we have seen in this, you have to keep your mind open that questions can come from all of these things. Then practice question, management stopped deposits into gratuity fund and disclosed a contingent liability of 2 crore. What auditor procedures will be involved in this? Obtain actual valuation, review board minutes and policy for reasons, test past payments and legal letters, consider effect on going concern and disclosure, if sufficient evidence, qualify opinion. Now this can come in your EPFO exam, so the answer is no. This is just for understanding. Don't worry, otherwise don't worry if you're not getting it. Not that important. Then flashcards or your revision material or your expected questions. So what is the auditor's primary objective in audit of financial statement? To obtain reasonable assurance whether the financial statements are free from material misstatement and express an opinion. With standard auditing deals with subsequent events. Standard auditing 560. With standard on auditing deals with related parties. So standard on auditing 550. Which standard on auditing governs auditor's report. So standard on auditing 700, 705 and 706. Then what is materiality? Magnitude of omission or misstatement that could influence user decision. That is standard on auditing 320. Then give to high reliability audit evidence types, external confirmation and original contract invoices. Then what are analytical procedures? So risk assessment, subsequent testing and final review. That is standard on auditing 520. What should auditor do about management estimates? Evaluate reasonableness of assumption and methods. Test outcomes. Standard on auditing 540. Name two types of audit opinion. Unmodified, clean and qualified. When is an adverse opinion issued? When misstatements are material and pervasive. What is a disclaimer of opinion issued? When unable to obtain sufficient appropriate audit evidence and the effect is material and pervasive. Then what is going concern audit? Evaluate whether entity can continue for 12 months from reporting date. That is standard on auditing 570. What is auditor's duty for subsequent events? Identify events after balance sheet date requiring adjustment or disclosure. Standard on auditing say 560. Why obtain bank confirmations? To verify bank balances and undisclosed liabilities, that is external confirmation. What is key audit matters? That is KAM, key audit matter. Significant matters communicated in auditor's report, IFRS and ISA context. What is role of management representative letter? Management's written confirmation of representation and completeness of information. Then what to do if related party transactions are undisclosed? Consider limitation of scope and possible modification of opinion. That is standard on auditing 550. What is an adjusting subsequent event? Event that provides evidence of conditions existing at balance sheet date and that must adjust financial statement. What is an example of non-adjusting subsequent event? Major fire after year end that arose after balance sheet date. Disclose if material. What is the final audit procedure before opinion? Final analytical review and evaluation of misstatement against materiality. So this is it. You'll find this PDF on the Telegram as well as the other PDFs. Will also be available on the Telegram for this particular exam as well as the other exams. If you need any other information, if you have any other query, then do let me know. I'll try to help you with it. So that's it. All the very best and thank you.